What's up, YouTube and my fellow traders? How are you? How's everyone? And today again, I have bring one more video for this SPY technical analysis. It was May 20th, and today was really interesting day. If you have, if you were active in the morning session, afternoon, or in the evening, I'm not sure which one you traded. But if someone is a day trader who, look the entire market starting from 4 a.m., right, until 4 p.m., and then, then still, keep checking what exactly SPY is doing, right? So for them, the market was really interesting because today it was not expected that they're gonna take they're gonna do a rug pull around at what time we see the rug pull, yeah, 2 p.m., right? This huge bearish engulfing is telling something in the market, right? So we will discuss what exactly happened, how they did it, and I marked some level yesterday in my previous video. One of them, is broke. However, in my video I explained if 591 and 592 broke, then market should test 587. However, the market, get some support. It see like you see the wick here, right? At 3 p.m. and market sees lows of 589 and then it started to go back up. And I will tell you the reason why it started to go back up. So look at this particular wick, right? All we need to do is look for the, so how, what is the best way, what is the best way to find out where the market can rally, where they can say some support, right? If you look at the previous day, right, there is nothing, right? I mean, because in previous day they straightly take it the entire market up, right? It was all right. I mean, it was all like bullish engulfing, and then little bit consolidation and up, right? They take market this way up. So obviously, then when the market goes like this, right? When market goes like this, then definitely this not making any support. It just keep going up, right? However, this particular support exists a day before. If you come here and look at this particular level, right? What do you see? So a day before, I think it was 16th May was Friday, right? Where the Moody's news came at the end of the market. So on 16, what they did in pre-market, the market was like this, and right start of the market, there was some support over here, right? Around 589, and if I compare this level, this is 588, right? So market make very huge move uh, on Friday at this particular level. So same thing happened today when market, when the rug pull occurred around 1 p.m., the market make, tested the day of the previous day yesterday, right? And that is from it again sees a small rally up to 592, right? I guess let me see the level. It was 594, but as we got a strong rejection at 594, that's the reason it couldn't even reach up to 594, right? You see one rejection at 594, second rejection. Look at this rejection of 594. This is a rejection, a good rejection level now, right? So if I draw this particular horizontal yellow line and I bring it up this level, right? Let's put it here. So 594. So 594 is a good rejection level right now. And then, like because it broke those 592 and 591, those are also kind of a order block of rejection level, because those were acting as a support, right? So these two level 592 and 591 so far acting as a support, and now because the market has broke them down already, now they are acting as a resistance for the market. So even if you see here, look over here at this 592.85 in my right side, right? If you look at it, then market start, like when market started to go up, it again see rejection right at this particular point, which is 592, right? So now, so one thing is clear. One thing is, like with this data, only 2 days data, right? What I can say is on the Friday and Monday and Tuesday, we have 3 days data, right? Friday, Monday, and today was Tuesday. So what I can say is market always, so at least, like you should have those levels in the mind of the previous days, wherever you see a big huge rally in the market, right? So if I come before Friday, right, this is the level you see from 585. What a good move, right? This is one, key support. When the market, like it started to come down, so it will be easy for you to recognize if the market has started to, do a rug pull or start to come down, which levels are the one where you should exit the position, right? And that is very important, because we all knows that whenever you take out the position for the short or the long, you are unable to achieve the target fully. That is where the bigger problem of all the traders. So but if you have levels in your mind, okay, these are the points where you see the huge rally, right? That is where, you can hold, and that is where you can hold and take the bigger profits instead of tiny profits, or instead of just 10% or 20%. Because think about, when you started to see the losses in the market, you just keep holding them, right? But when you see profit, you always say, okay, okay, let me take this profit, let me take this profit. This is always in the mind, right? So this is what I wanted to say, that and why it's like that, why the situation started to appear, that take profit soon, that take profit early, right? That started to appear, or that situation pops up when you do not have any levels in your mind, and this level require a pre-work, right? So, and that is why I am here, right? I try to break down the SPY daily, what it is doing, how it is doing, right? And yesterday I mentioned that clearly, like if we unable to hold 591 and 592, then we will see 587 for sure, right? So this is a small recorrection I wanted to do, because this is small data I missed, uh, because Friday no one expected that after hours they can take this entire thing down, right? And even though on Friday 586 and 585 was a very good support, right? So Friday they take it down, and then Monday morning it everything, everything recovered up to 596, the same level uh which was which was the level on Friday. Okay. Now, this was a discussion regarding yesterday, day before, and one more. So which levels you see, where you see the big rallies, those level you should mark. So let me write it down, or let me just put this horizontal yellow line, right? So it will show right here. You see that? And I can do one more thing, I guess. Let me select the line. Let me make a color red. So you can see from, you can see the point where the big rallies came in the market, right? So what all I can do is, like, this is a 15-minute charting I'm doing right now. So 15 minutes charting I'm doing. So let me see what happened here. 1 minute, 5 minutes, right? All right. And then 15 minutes, right? All right, guys. So these were the levels for levels for tomorrow. What I expecting tomorrow now? Let's see. So let's go on 5 minutes first, right? We will started to find out what are the liquidity levels. So look at this 587 again, right? 587 should supposed to come because this level has to be tested. As I mentioned yesterday, 591 and 592 order block has already been mitigated, right? As soon as they got mitigated, we started to see a new low, and this was our 589. So what I can do, I would definitely put one horizontal line over here, because is from 589 what happened, we saw a move of how many points or how many dollars. It is close to 589 to 92, like $3, right? $3 thumb 30 cents, right? So for tomorrow, these are the levels I can say. First level will be our 589, this 58, because this seems to be a very strong level on the past scenarios, right? Because here we see always see a good, good buy in the past, right? So this is the level. Let me just mark it down again. Yeah, 589. And right below 589, if you see this particular, I will make a order block over here. I'm gonna create a small rectangle over here. So this will act like this particular entire level. This up to here. Why up to here? I will just explain in a minute. Right? So look at this resistance, right? Was a resistance over here, resistance over here. So this particular order block 588 to 589, this will be our new support for tomorrow trading day, right? And below that, this obviously this 587, because that is where one more huge rally came. So this is a good support at this point. First is 589 and then it's 587. So we can divide in terms of order block. So if 589, 588 and 589 able to hold the market, then the market will try to go more up. And as I said today, the 591 and 592 levels were those got mitigated already, right? So this will act as a new resistance for the market, because that is where we see a huge selling, right? Look at this 592 level, right? 592.82 or something. There we see a huge selling, right? So this is the range in the aftermarket and during the market they created, 589 to 592. So this $3 move is range basically for tomorrow morning. And now if I draw a small trend line over here, right? I mean, This is a start, kind of a start of a new trend, basically, right? If I try to join everything right here, right? So this trend line at the end of the market, you see they it try to break. Means bulls were trying to take the control, but again, right after this, right, 7:55. So 8 p.m. the last candle tried to break this trend line. So there is a possibility when the market opens tomorrow, either it it sees a gap up over here. Okay, today one more thing I forgot to mention. Market is open as a gap down today. So I want to draw a one more rectangle over here which will show you this gap down scenario. This gap down. So if this gap down came in the market, this gap also has to fill 593 to 595, right? So if somehow market able to, yeah, tomorrow morning be able to break this resistance, which is new resistance is 591 and 592 zone, then this next level, right, from 594 to 595, we will see a good number of time pass consolidation kind of stuff, because this gap has to fill, right? So I am expecting a choppy market tomorrow, right? Because think about the scenario, even if in the morning if they able to break and gap up, what is gonna the problem will be? This particular zone, they will do chop, and I think if you are seeing these days market, there is no volume, like very less volume, right? One candle goes up, one candle immediately goes down, right? So what does help in this kind of time frame? I think what you can do is, instead of choosing 1 minute or something, 15-minute time frames are good to get the good idea of what market exactly trying to do, right? So that will help you in finding out whether to buy, open anything in the new candle or no, right? So look at this huge bullish move came, and then the immediately taken care by bears by selling off this entire, bullish engulfing. So this particular candle right at between 10:30 a.m. and then this one was like 10:45. So these two candle confirm in the market that bears are there in the market, right? But the volume was not super crazy, which were letting them drive slowly, right? Because bears also has fear that if we like we if we try to liquidate the positions of the bulls, right? When I say bulls, they are multimillionaire positions. It's not just $100 or $200, right? So bulls also has fear if they try to take out those bullish moves or bullish position, there is a chances that they can be completely wiped out, right? So that's how the operation works, that's how the algo works. Slowly they start. So in this first wick candle, right, they check where they sit, the bulls are sitting, right? So first they found right in the market, right? I told you the 591 and 592 were the levels which were, which from which it bounced yesterday. So the same level tested by bears, and then they found that the bulls are sitting there. So they find out that is where we will see some kind of resistance towards downside. So what they started to do during the day, they take it up, right? And they knew very well if they come on 592, then they can see another bounce, right? So slowly they started to take care of all the bullish moves. Every bullish move is taken care by bearish candle. So look at this one, and this was all. There was a lot of bullish engulfing today. As soon as the bulls empire, bulls enter in the market, the bearish engulfing always taking it over, right? And this particular move 115 to 215, right? So 1 hour selling occurred in the market. This is telling me something, guys. It clearly means that bears are active in the market right now, right? And less buyers. And why we have less buyers? Because think about the market right now. The market is mostly, like it has fully recovered. Only we are only, right, how many points away? 596 and 14 points away, I guess, right? And I think 611 was the high, right? If I look at 4 hours, 4 hours, how many more points? 613 was the high, right? So nothing much left, right, at this point. So even bulls are like, like even if we want to take this up, what is next, right? Even they are clueless right now, right? So both are clueless. So basically the good moves from bulls is just, stay where they are, and bears can play their game, right? And so bulls moves, that's why, like whenever you see a good bear move, like it is almost recovered by a bulls move, because bulls want to do, take this to all time high up to 613. And like up to 613, let me make 613 up to here, up to at this point around, still want to take up to this point. So they are, like they are keep try to stay in the market so they can cover this huge gap. But this huge gap cannot be just covered by this kind of movement. Bulls also has to understand that if they, do a straight buy, then definitely there is a chances that the way they came up in a similar way it can go down. So they have to complete this particular level. They, if they want to achieve this, then this has to be completed in a fashion. And when I say fashion, then fashion means go up, right? The move came up, consolidation, up, consolidation, up. If things work like this way, right? Because this is a proper bullish move where you see higher high, higher high, another higher high, another higher high. But those higher highs are coming after a small consolidation, right? This kind of consolidation. If the market goes like this, then it's a valid market, and then definitely you, in this kind of market, you can open positions for the long trade. Because this kind of market, if they make it, this is what, it's not easy to break this kind of market. But this kind of market goes like this and also come like this. So never trust on this kind of parabolic move market, because the way it goes up is similar way it can come. When it will come down, maybe it's gonna take time to even. But this kind of market, if you try to enter, what is happen? You always have level in your mind, right? And levels means like, okay, if suppose you stuck here, right? Suppose you open position here and you stuck. So what you can do is, like there is a consolidation phase gonna come. So after one consolidation, you have levels in your mind of the previous day, right? Okay, this was the previous day. If I open position here, then what would be my stop loss? Stop loss will be this previous low. Another stop loss would be this if you are a high risk trader, or if you have more money, right? So at least you have couple of stop loss levels in this kind of market. But this kind of market, nothing is there, man. You go up, you come down, right? So if you are trying to entering position in this such market, then try to stay away. You will definitely, it's a blind, you are just want to go blind. It's like, then there is no difference between playing playing doing a trading, right? It's a trading, it's no luck, right? I mean, don't think that it's a luck that it you will just always win, right? So try to stay away from parabolic moves, right? Like today we have in a gold we have a very good parabolic move. So, and it goes like this: 90 20 90 to 100 points, then definitely it's going to come in a similar way. Right, so all right, guys. So let's come back to our topic. What will be the game plan for tomorrow? I have given you the levels already. Let me put one more horizontal line so you have levels marked here. Right, so 589 and 592. These two levels are will be the key for tomorrow, right? Because in the pre-market, if it's break 592, then we will see 592 as a support, right? If 592 breaks, then we will see this particular line as a support, right? And then market will go up, revisit, or I will say retracement, and then definitely it will try to go more up. And in this range, the market will do this gap filling. So in morning, if the market gaps up, right? If it's gap up means it will definitely open above 592. If it's above over 592, then I'm hoping in the pre-market they try to consolidate, right, in this zone, right? And once the market starts, if the consolidation is good, then there is good chances market started to see more high, right? This is the game plan for bullish scenario if the market opens as gap up. And one more thing is we cannot just go directly. I would definitely, even in this case, I would definitely love to see the retracement of this level, which is 592, right? So 592 must be retraced again for the bullish move. If it is retracement again and then holds, then we can see a new bullish move up to, we have those levels, right? Let me see. 595 and 596. Again, the levels will be same. There are no changes, right? Because you have this 596 already here. So definitely you can see a new high targets like about 597 and 599, right? So if 592 breaks, we can see this kind of a structure, right? Break 592, hold 592, consolidate in this range 593 and 594, and then new high 596 or something, right? Now if the market fails to break this 592 and started to see rejection, right, then we will see again sell off and then testing of 589 level, right? Another level I told you is 587, right? So if the market retest and rejecting 592, market retest 589, rejecting 592, then there is chances we can see another failure and testing of 587 level, right? So 587. So bearish scenario like market failed this, and after failing it will try to retrace 589. If 589 hold, then there is a chance it will try to go up again. But if 589 does not hold, which I am hoping it will not, right, then we can see a newer low which is 587, right? This much percent it can break in one day. I don't think so. It can go up to 583, but that is where I am hoping, right? That the next level would be because I mean, this 583, 585, because 585 is also very good level. So this is another order block, I must say. This order block I'm talking about after 587, this 585. Let me write it down, right? So 587 must be tested. If we do not see a huge move, I think if we come to 587, then we can see another huge move, right? But again, after 5, if it's come to 587, then how many resistance you have to cross? 589, 592, and then 594. So there will be three resistance. And then think about in terms of liquidity, right? So liquidity, like the market moves in the direction of liquidity. So suppose you came to 587, what you will do, you will try to open put right here at this point. It means you are giving a liquidity to the market your money by entering a big position where the buy occurred in past, right? So what gonna happen, as soon as you open the position, they gonna take this up to liquidate your position, because the stop loss will be, for you the stop loss will be very small, right? Up how much, how much our capacity, like 100, 200, 300. I think it's always a general thumb of rule, like you can try to take a stop loss of 10%. So if your portfolio value is like, if you have opened a call of like 500, then 50 will be your stop loss, right? This is how general thumb rule works. But some people what they do is they always put a stop loss from where the selling starts, right? So in that case you need to understand where you are buying in the market. So tomorrow, suppose if this started to go down, the put position should not be open at this point, right? Where you will open put position. So suppose the market come here and then try to do some retracement. So I would love to buy a put position at this 592 instead of 589, right? Because then there is a room, then they can take this particular liquidity to 592, because there whoever buy the position at this point, they knows, I mean, they can, like, if some bigger player, they can bear they who has a bear, like, good capacity of taking loss, they can put a stop loss up to 592. So it will go up to there, take all the stop loss out from the market, and then we'll see another new low, which is 585, right? So much drawing over here, right? So this is what all I can think of for tomorrow. As I say, like, guys, have a safe trading. Do not open a bigger positions, because they are, because if you are open bigger positions, right, they are like liquidity for market these days, because the markets are dried up, bulls are not here, and whoever enter a bigger position, that immediately taken care by bearish or hedge funds, right? So you need to be very careful, you need to play a smart game. The smart game will be, buy always. If you want to open a call, then always try to look for how cheap calls you can get it, right? And how you can get it, right? So suppose if I want to take a risk tomorrow, should I take risk at this particular level, or this particular level, right? Suppose I know, like, you will say, then you can never do trading, I mean, the opportunity will not be appear. Then it's fine. One day if you don't do any trade, that's also fine. The main goal and motive is always buy, always buy cheaper, right? Always look for the cheap stuff. Cheap means which was in the money before. Cheap means does not means OTM, out of the money. Cheap means which was in the money, and now you are seeing that particular premium of that particular call, or put at discounted price, means like 70% discount. This kind of one of the put I had today, that went from $4 to 1100. Sorry, $4 to 2300. Right. Right, it gives like 4 3 at 24, like like 300%. I mean, it was 100% basically, and then 300% because it went up to. Yeah. So tomorrow game plan is simple, guys. The game plan would be, like as I mentioned already. Um, if the market gaps up, then look for this 592 break. If the 592 break, then chop 594 and between this level, and then consolidation entire day, and then maybe move up, right? However, be careful, it can again retest this 592, and if survive on retest, if 592 hold, then we can see next. I'm talking about the next retracement. If 592 survive, then we can see a new high. But if the market see some resistance right in the morning at 592, ready for, ready for doing a short. But where to open the short? Two levels. One is 592 and another is 594. Right? Because 594 we see a selling how many times? One, two, and even in past, maybe. I mean, if I just do 4 hour, we can see a lot more selling at this point. Right? Alright, guys, so this will be our trading plan for tomorrow. However, I would love to buy, like from where I would love to buy, I will tell you. This is where I'm looking at this particular level, at this particular level, 587. This is where I would like to open. I will start to take a long, I will start open a long position. Right, I will not wait whether it's holding or not. I will just buy it right over here because definitely, man. I mean, why? And then this will be my stop loss, 586. Right, because below that 586 we can see a free fall up to 580. Right, so if the market touched 587 tomorrow in the morning or during the market, I would love to, enter a long position. Whatever happened to the long position happen. I will take a stop loss. If the market want to give me a stop loss, I will take it. But this 587 is very solid level where we can see a good buyers started to jump. And the rule of, like either jump directly, or what you can do is you can wait for 3 minutes, and look for the candle pattern. If the, if three of the candles are bullish and they're crossing this 588, you see resistance over here. Let me put it here. You see this resistance I'm talking about. This resistance. If the market crosses this particular resistance, then definitely you can. I mean, this is a safer way. This is the safer way to open a position, right? If you just go directly in, there are chances they can take a little bit more down, right? So 587 we will consider this 586, right? Because what happened that they play, even they knows, right? I mean, you're gonna open at 587, so they take it a dollar or two more dollar down the market, and then That's how they play, because they always want to hit your stop loss. All right, guys. So enough for today, I guess. I think I have given you a good trading plan for the pre-market. Post pre-market, let's see how it's gonna behave. I will, try to position open position accordingly. And as I always say at the end of the video, like the BP, your buying power is important. If you are not carrying enough cash in your account, which is like more than 25K or close to 30K, then like you must be dealing with the cash accounts, and cash accounts must require a buying power. So like look at the today's setup, right, which this selling starts around like 130, right? And if you would have captured this move, you gonna see this move from 593 to 593 dollar move is pretty good. Pretty good for like for the people who do day trade. All right. All right, guys. So I would say once again, happy trading for tomorrow. Tomorrow will be one more interesting day, I guess, because again we will see some manipulation, chop, and crushing of premiums as they always do, right? So that's all I can say. Just try to stay away from traps which are everywhere in the market, because there is no volume in the market. Try to stay away from bigger position, because as soon as you open bigger position, that is the volume for the market, and they can just they can just trash your position or kill your position immediately by reducing the value, or like take that trade in opposite direction of your position. All right, guys. All right, guys, then thank you so much. Please keep and make a note of the levels before entering into the market. All right, thank you.